So after 10 years while redeeming, they are redeeming at a premium. So you're issuing at a par. So what is the net proceeds in the question given? 15 lakh. On that 15 lakh, 8% is the dividend given. How do you identify whether it is a redeemable preference share or irredeemable preference share? If the number of years is given, it is redeemable. Hello everybody, a warm welcome to you all. I'm Divya, Assistant Professor from Department of Commerce and Management, lecturing Vidhyaashram First Grade College, MYSURU, the Temple of Excellence. In today's class, Session 7 on cost of capital, we'll be discussing on the problems on irredeemable preference share and the problems of redeemable preference share. In the last class, we have discussed problems on irredeemable debt and the problems on redeemable debt. In today's class, let us look into the problems on irredeemable preference share. So how do you identify whether it is a redeemable preference share or irredeemable preference share? If the number of years is given, it is redeemable. So let us look at the problem number 1. So Zen company issued how many shares? 1000 10% preference shares of rupees 100 each. Find out the cost of preference share if they are issued at a par, premium and 2% discount, and the transaction cost they have incurred, that is 2%, which is constant for all. Ignore the taxes. So that is what the question is given. So number of years is not given. So the problem is irredeemable preference shares. So what is the given value? 10% preference share of rupees 100 each. So on 10%, if you take the 100 into 10%, the dividend value will be how much? 10 rupees. So preferential dividend is how much? 10 rupees. So what is the formula for your irredeemable preference shares? Irredeemable preference share is equal to cost of preference share is equal to preferential dividend divided by net proceeds. So what is the formula? Preferential dividend divided by net proceeds. So this is the formula for cost of preference share irredeemable problem. So what is dividend? Dividend is 10 rupees. And what is the net proceeds? It is 100 rupees. If it is issued at par, it is 100 rupees. If it is issued at premium, what is the premium cost? 5% is the premium cost. So 100 into 5%, it will be 5 rupees. So 105 will be your net proceeds for premium. And at discount is how much? 2%. So 2 rupees will be your discount. So 98 will be the discount net proceeds. So first case, issued at par, 10 rupees is the dividend and your net proceeds is 100 and 2 rupees. What is this 2 rupees? It is nothing but the transaction cost. So transaction cost is how much? 2% is the transaction cost. 100 into 2%, it will be how much? 2 rupees. So 100 minus 2, it is 98. So net proceeds 98, preferential dividend 10 rupees. If you substitute the value, you get 0.1020 or 10.2%. Moving forward, it is issued at a premium. So as I have told you, 105 is the premium. So 105. So on the issuing value, whether it is issued at a par, issued at a premium or at a discount, so whatever the expenses that comes, that is your flotation cost, your transaction cost, all the expenses has to be deducted from the issuing amount itself. So if it is issued at par, 100 rupees, so 100 into 2%. So issued at a premium, 105 is the premium. On that 105 only, you have to give 2% transaction cost. So 105 into 2%, it will be 2.1. So 102.9 will be the net proceeds. So if you substitute the value, 10 divided by 102.9, the answer you get will be how much? Will be 0.097 or it will be 9.7%. So this is the answer that is issued at premium. So let us look at issued at discount. So issued at discount, 100 minus 2, it will be 98. How did you get the 2 rupees? So discount is 2%, issuing amount is 100 into 2%, it will be 2 rupees. So 98. On that 98, we have incurred 2% flotation cost, that is 1.96. Your net proceeds will be 96.04. So if you substitute the value to the formula, you will get the answer 0.104 or 10.4%. Moving forward, so let us look at the problem number 2. A company issues 20,000 10% preference shares of rupees 100 each. So what is the face value? That is your issuing amount, 100 rupees. What is the 10%? Dividend and redeemable after 10 years. So it is redeemable problem after 10 years at a premium of 5%. The transaction cost will be how much? The transaction cost, the cost of issue will be 2 rupees at a premium of 5%. The 2 rupees cost per share, calculate the cost of preference shares. So this is the question given. Let us write down the given first. So what is given? Given is equal to, so what is given? Dividend is given, 10% preference share into 100, the dividend will be 10 rupees. And next, what is given? 100 rupees is given. So while redeeming, they are telling after 10 years, number of years 10. So after 10 years, while redeeming, they are redeeming at a premium. So you are issuing at a par. So net proceeds will be how much? Net proceeds will be 100. So you have incurred rupees 2 as what? Your cost of issue. So net proceeds will be 98. Maturity value will be how much? 100 into 5%. It will be 105 rupees. So 105 rupees. So this is the value given. What is the formula to compute the preference shares cost of redeemable preference share? The value or the formula is cost of preference share is equal to dividend plus maturity value minus net proceeds divided by number of years whole divided by maturity value plus net proceeds divided by 2. So this is the formula that is given for redeemable preference shares. So now let us use the calculator and solve the problem. So what is preferential dividend? Preferential dividend is 10. What is maturity value? 105. What is net proceeds given in the question? 98. And what is the number of years? Number of years is 10. So whole divided by 105 plus 98 divided by 2. So this is the formula. So let's solve this bracket first. So 105 minus 98 divided by 10. The value will be 0.7 divided by, let's solve the denominator bracket now. So 105 plus 98 divided by 2, the value will be 101.5. So what is the third step we have followed? We have been following since from the redeemable debenture problem. So the next step that we have been following is what? To add the number with 10. So in your dividend is how much? 10 plus 0.7. If we do it, the answer will be 10.7 divided by 101.5. So 10.7 divided by 101.5, the answer will be 0.1054 or it is 10.54%. So what you have to do? So you have to solve the numerator bracket first. 105 minus 95 divided by 10. So you get the value as 0.7. Next is 105 plus 98 divided by 2. If you do that, the answer you get is 101.5. So next step is what? Add the number with the dividend. So 0.7 plus 10, it will be 10.7 divided by 101.5. It will be around the cost of preference, redeemable preference share. The cost that is incurred is how much? 0.105. If you convert that into the percentage, it will be 10.5%. Moving forward, for your more clarification on the problem, we are taking up another problem. A company has capital structure which as preferred stock carried 8% dividend. So what is dividend here? 8% of rupees 15 lakh. So what is the net proceeds in the question given? 15 lakh. On that 15 lakh, 8% is the dividend given. To be issued to the public of 5,000 preference shares. So there was a flotation cost 10%. So what is the flotation cost? 10%. So the company decided to redeem at the end of 10th year. So at the end of 10th year, so they have not mentioned whether it is redeemed at a par or at a discount or at a premium. So they have directly given the number of years. Find out the cost of preference. So what is given in the question? Let us write down the given first. So given how much? 8% dividend on 15 lakh. So 15 lakh into 8%. So let us use the calculator. So 15 lakh into how much it is? 8%. It will be 1,20,000. So what is this 1,20,000? It is dividend, preferential dividend. And what is your net proceeds? Net proceeds is 15 lakh. So there is certain issuing cost that has happened while issuing the shares. So what is that issuing cost? Flotation cost. That is how many rupees? Minus flotation cost at 10%. So 15 lakh into 10%, it is 1,50,000. So 15 lakh minus 1,50,000, the value will be 13,50,000. So what is this 13,50,000? It is net proceeds. So number of years is given in the question. What is number of years? 10 years is the number of years given. So what is the maturity value? Maturity value will be 15 lakh itself, since the company is not issued at a par, since the company is not redeeming at a premium or at a discount. Since the company is not redeeming at a discount or at a premium, so it is redeemed at a par. So that's why the maturity value will be how much? It is 15 lakh itself. So now all the given values, let's substitute into the formula and look at what is the cost of redeemable preference shares. So what is the formula for cost of redeemable preference share? It is nothing but preferential dividend plus maturity value minus net proceeds divided by number of years whole divided by maturity value plus net proceeds divided by 2. So this is the formula that is there for your redeemable preference shares. So what is preferential dividend? Preferential dividend is 1,20,000 plus what is the maturity value? 15 lakh is the maturity value. What is the net proceeds? Net proceeds is 13,50,000. What is the number of years? Number of years is 10 years divided by maturity value minus add net proceeds divided by 2. So this is the formula. So now let us solve the bracket part first. So first bracket, that is 15 lakh minus 13,50,000. It will be around 1,50,000 divided by 10. The value we get is 15,000. 15,000 divided by, now let us solve the second bracket now. So 1 lakh 50,000, 15 lakh plus 1 lakh, 15 lakh plus 13 lakh 50,000. It will be 28 lakh 50,000 divided by 2. It will be around 14 lakh 25,000. How much it is? 14 lakh 25,000. So now we have to add the number with the dividend amount. So 15,000 plus 1 lakh 20,000. It will be around 1 lakh 35,000. How much it is? 1 lakh 35,000 divided by 14 lakh 25,000. So what will be the answer? 1 lakh 35,000 divided by 14 lakh 25,000. The value you get is 0.0947. If you just multiply with 100 to check out the percentage, it will be 9.4%. Problem number 4 and the last problem for today's class. So T Limited issues 1 crore 12% preference shares of rupees 100 each. Net proceeds 100 and 12% is the dividend. Redeemable at a par. So after 5 years, you're redeeming at a par itself. So after 5 years, you're redeeming at a par. Calculate the cost of preference share in which each of the following cases. So there are 3 different cases given. There are 4 different cases given and all the 4 cases also to be discussed. So if preference share are issued at a par with flotation cost 5%. So what is the flotation cost? 5% issued at a par, redeemed at a premium. That is the first case. Next, if preference share are issued at a par with no flotation cost, issued at a par, redeemed at a par with no flotation cost, case number 2. Case number 3, that is if the preference shares are issued at 10% premium, so issued at premium with a flotation cost 5%. And the last case is the preference shares are issued at 10% discount with 5% flotation cost. First case is with par and with the flotation cost. Second case is issued at a par with no flotation cost. Third case is that issued at a premium with flotation cost. Fourth case is that issued at a discount with flotation cost. So let us write down the given first. So what is given in the question? Given is equal to, so what is given? 100 rupees is the net proceeds. Okay. And what is the dividend? 12 rupees is the dividend. How did you get this 12 rupees? 100 into 12%, it will be 12 rupees. So let us compute the first condition and number of years is 5. So what is the formula? Formula is nothing but your preferential dividend plus maturity value minus net proceeds divided by number of years divided by maturity value plus net proceeds divided by 2. So this is the formula we have for cost of preference shares. So what is given? Issued at par, redeemed at par itself. So your maturity value will also be 100 and your net proceeds also will be 100, but you have a flotation cost, that is your 5%. So if you deduct 5 rupees. So how did you get that 5 rupees? 100 into 5%, it will be 5 rupees. 100 minus 5 rupees, it will be 95. So preferential dividend 12 rupees plus maturity value 100 minus your net proceeds 95 rupees divided by number of years is how much? 5 years divided by 100 plus 95 divided by 2. So this is how we have to solve the problem. So now let us use the calculator and solve the bracket part first. So 100 minus 95 divided by 100 minus 95 divided by 5. It will be 1. So 12 plus 1. So now let us calculate the second bracket part first. So what is the second bracket we have? 100 plus 95, 195 divided by 2. So if you do 97.5. So 97.5, 12 plus 1, 13. So 13 divided by 97.5. The answer you get is 0.133. If you convert that into the percentage, it will be 13.3%. So now let us solve the second case. What is the second case? The second case is if preference shares are issued at a par with no flotation cost. So your given will be what? Maturity value also 100, net proceeds also 100, number of years is how many? Number of years is 5 years, and the dividend value we get is how much? 12 rupees. So let us substitute the values. So 12 rupees dividend plus maturity value 100 minus what is the net proceeds? Net proceeds is also 100 divided by 5 divided by again 100 plus 100 divided by 2. So this is the values. Now let us check what is the cost of preference redeemable preference shares. So let's solve the bracket. 100 minus 100 divided by 5, it will be 0 only. So 12 plus 0, it will be 12. So 100 plus 100, 200. 200 divided by 2, it will be 100. It will be 100. So 12 divided by 100, the value is 0.12, or if you convert it into the percentage, it will be 12%. So now we are into case 3. If preference shares are issued at 10% premium and at a flotation cost 5%. So what is your net proceeds? Net proceeds is how much? 100 into 10%, it will be 110 rupees. So on that 110 rupees issue of premium, you have incurred the flotation cost 5%. So 110 into 5%, it will be 5.5. So less your expenses, that is 5.5. So 110 minus 5.5, the answer is 104.5. 104.5 is your net proceeds. So with the 10% premium and 5% flotation cost. So let us substitute the values to the formula. So cost of preference shares is equal to preferential dividend. What is the preferential dividend? 12 rupees is the preferential dividend. So 12 rupees plus what is the maturity value? Maturity value is 100. What is the net proceeds we have calculated? 104.5 divided by number of years is 5 divided by 100 plus 104.5 divided by 2. So now let us solve the problem by using a calculator. So 100, let's solve this bracket first. So 100 minus, it is how much? 104.5 divided by 5, it is how much? It is minus 0.9. So 12 minus 0.9 divided by, let's solve the second bracket first. 100 minus 100 plus 104.5 divided by 2. The value will be 102.25. So let us solve that again. 100 plus 104.5 divided by 2, it is 102.25. So now we can add or subtract. Let us add or subtract with the dividend amount. So 12 plus into minus, it will be minus, it is 12 minus 0.9, it will be 11.1 divided by 102.25. So now let us solve this. 11.1 divided by 102.25, the answer you get is 0.108 or 10.85%. So how do you get this percentage? The value what we have got, if we multiply that with 100, you will get the value. So this is your cost of preference issued at a premium 10% with 5% flotation cost. Moving forward, the next case and the last case, is if preference shares are issued at 10% discount with 5% of your flotation cost. Now let us write down the given. What is given? They are issuing at discount. So what is the discount amount? That is your 10%, 10 rupees. So your net proceeds will be 90 rupees since it is issued at discount with a flotation cost 5%. So 90 into 5%, it will be 4.5. So 4.5, if you deduct, you'll get it 90 minus 4.5, the answer will be 85.5. The answer how much you get? 85.5 is your net proceeds. So let us substitute the value. So what is the dividend? 12 rupees plus maturity value minus net proceeds divided by number of years and 100 plus 85.5 divided by 2. So this is the formula that we have, and we have substituted the values to the formula. Now let us solve the bracket. What is the first bracket that is there? 100 minus 85.8 divided by 5, the value will be 2.9. So 12 plus 2.9 divided by, so now let us calculate the denominators bracket. So 100 plus 85.5 divided by 2. So the value will be 92.75. What is the third step we are following? We are adding the amount with the dividend. So what is the dividend? 12 rupees plus 2.9. It will be 14.9 divided by 92.75. The answer you get is 0.160 or it is 16%. So what will be the answer? The answer will be what will be the answer? The answer will be 0.16106 or it is 16%. So your cost of preference, redeemable preference shares. So that's it. I'll be moving out of the screen, my dear students. You can take up the screenshot. If you don't solve the problem on a daily basis, you will not understand. So for your homework, kindly take up the screenshot and solve the problems. Problem number 1. This problem is irredeemable preference shares at par, issued at a premium, issued at discount. So this is the problem based on redeemable preference shares, that is issued at a par, redeemed at a premium. This is your third problem. Fourth problem, we have all three conditions, all three cases that has been solved. First is issued at par with flotation cost 5%. Second is if preference shares are issued at a par with no flotation cost. And third one is if it is issued at 10% premium with 5% flotation cost, and if it is issued at a 10% discount with 5% flotation cost. So that's it, my dear students, for today's class. Hope the session was very interesting for you people. Solve the problems. So keep on learning on a daily basis to score good marks in your financial management subject. So smile is the biggest jewel you can wear. Keep smiling. Thank you.